my fellow freedom builders, and welcome back to the channel. Now it is New Year just in about a week and a half, and of course every media, every financial media out there is trying to bring on some expert telling you where will the market go in 2024. And as you know, I usually say on this channel, nobody knows, and there are no fortune tellers here, none of real value anyway. However, I will try and make a little guess on 2024. And I could easily be wrong, and that is where many experts go wrong, because they are married to their opinion. If they have gone out and saying the market should go up 20% or 10% or down 30%, then they're married to that position and their ego won't let it go. Now, I am completely aware that I could easily be wrong, but I will look at some statistics today and I'll try and show you what could happen in 2024. And just be open to the possibility that anything can happen, and I could easily be wrong. Now, what we're looking at here is not so much me trying to guess where something will go, but we'll look a bit at the historical data. And what I'm showing you here is stock market reactions to a Fed interest rate cut when we're looking at it historically. And as you can see, we have data all the way back from 1921 here and up towards the financial crisis. Now, I know that as far as I can tell, we don't have 2008 in this calculation, but I'll show you that just in a second. What it shows you here is the blue one is all first rate cuts. And what this measures is how has the stock market, the S&P 500, performed after the next 6 and 12 months after the first rate cut that Fed makes. And as you know, everyone are talking about that Fed will cut rates maybe in March, maybe in April, maybe 3 times or 4 times or 5 times in 2024. And in my opinion, that will be positive, at least in the shorter term for the stock market. We should remember that the reason why they're cutting the interest rates is that the economy is going a bit slower and so on, even though actually the US economy is doing something like 5+% in the estimates now for 2023, so that is not that bad. But what we can see here is the blue line, that counting all of these scenarios where the Fed have cut rates since 1921, we can see that the 12 months after that, the market is on average up something like 16-17%. That is not bad at all. However, there are 2 graphs more, or 2 lines more on this graph, and that is first cut with recession in next year, meaning that if Fed cut rates and then we are going into a recession, then the performance is somewhat lower, meaning it is only down at around 12-13% over the next 12 months. And we can see the recession cases in 21, 24, 26, 27, and so on, all the way up to 2007. Whereas the green one is first cut with no recession in next year. And here we are seeing something like 25% in the positive for the next year. So if Fed is cutting rates, for instance in March, which I think they are, we could see, if the average holds, somewhere between 13 and 25% positive performance in the market over the next 12 months. Now, if we're looking a bit deeper here, I have some more stats, and as you can see, these are only counting from 1998 and up until the 2020. And in this case, this is a bit of an old article, so they don't have the numbers for 2020. However, we know that the next 12 months after the rate cut in 2020, the market just rocketed upwards, so this should drag the numbers upwards somewhat. But what we can see here is that over the next 3 months, after a rate cut from Fed, where actually the next month we see an almost 3% positive, then we see 1.42% positive over the next 3 months, and then we go into the red. The reason for that is that we don't have as many years and we have the dot-com crash, and we have the financial crisis, which are two of the largest crashes in the stock market in newer time anyway. So having them, two outliers in these stats, will of course bring the stats down somewhat. So if we're looking at these, well, then the next 6 to 12 months are a bit less positive. But looking overall, it is actually quite decent. Now, the thing is, if we just go back to the first graph here, first caught with recession in next year. Now, many analysts are saying that they think US will go into a recession next year. First of all, as you know, a recession is, normally at least, counted as 2 quarters in a row with negative GDP growth, meaning that right now United States are growing with, we can just see the numbers that are expected here. Let's just have a quick look here at the daily FX. We can look at the economic calendar, and just today we are getting, we haven't got them yet as far as yeah, we actually have. We have the GDP growth rates. They were expected to be 5.2% annualized. It only went up to 4.9%. That is the number that should go into negative 2 quarters in a row to actually send us into a recession. I have my doubts that we will get there in 2024, maybe in 2025, unless something really dramatic happens. You can also see here that the core PCE, the inflation, is going down to 2%, which is actually great. That is what the Fed wants. The problem is that they wanted to be at 2%, and my guess is that we are actually going to see maybe close to zero, or maybe even deflation, meaning negative inflation. We can see that the normal PCE prices, that is the one including food and fuel, is 2.6%, which is slightly up, but not as much as expected. So, are we going to see a recession in 2024? Personally, I don't think so. We can easily see the economy going down in the speed decelerating a bit. However, there is a history of economy actually doing fairly good in years of presidential elections in the United States, and I am sure that Biden will do everything in his power to keep the economic wheels turning in the United States, so that the Republicans can't use the economy as an argument for voting for Trump instead. So my point here is, I actually think we already had the recession. Now you might say that is not really what the numbers show, and well, maybe they do. Because what I'm looking at is what is called real GDP, and that is where we look at the GDP growth rates. In 2021, that was 5.7%, but the inflation rate was 7%. Meaning that the actual GDP growth was actually minus 1.3%. It is a bit like if you got a 5% salary raise, but all the stuff you buy from a day to day in the grocery stores and so on went up by 10%. Well, yes, you got more money in salary, but you wouldn't feel it because everything you were supposed to be buying is going up in price. And that is basically what we're looking at here. In 2021, 5.7% in GDP increase, but 7% in average inflation, meaning that there was actually, if you're looking at what is called the real GDP, there was actually a recession already in 2021. Now, this article don't have the numbers for 2022, but let's just have a quick look here. I have the numbers from macrotrends.net. If we're looking at the GDP growth on average in 2022, it was 2.06%, so roughly 2%. Where was the average inflation in 2022? That was 6.5%. So we actually had a massive recession if you're looking at real GDP in 2022 of almost 4.5%. So in my opinion, when looking at real GDP, we actually already had a massive recession going on for 1.5 to 2 years here, meaning that when we're looking at this and people are saying, yeah, but we haven't had a recession and it will come, then actually maybe we already did have it. And we are instead looking at the green line here, expecting somewhat more of a positive year. So that is my guess. And as I said in the beginning, it's just a guess. So it could be that instead of going up 25% in 2024, we might be going down 25%. The good thing is, since I am both looking at fundamentals and a lot of technical analysis, I am looking at my daily charts and I am evaluating if the market shows that I'm right or that I'm wrong. If it tells me I'm wrong, I just adjust my positions. So I am not married to this positions. I think we are going into a very positive stock year here in 2024, but it might be negative, and then I will adjust my positions. That is as easy as it sounds, basically. That's all for now. I cross my fingers and hope that I am wrong about my predictions that we should actually up by 20 to 30% in 2024. But let's see what happens. I wish you a Merry Christmas and a Happy New Year, and I'm looking forward to make a ton of videos for you in 2024, no matter where the market goes. That's all for now. Take care of yourself and your money out there. Bye for now.